Hello everyone, welcome back to a new video. In this lesson, I'm going to break down another trade where I will explain the thought process and the implementation of my bread and butter strategy. I have previously discussed this strategy on the channel and I still receive dozens of DMs every day about it. So instead of answering them one by one, I will address them all at once in this single video. I will also discuss how to use inverted fair value gaps to determine the bias and to use them as a point of interest. I covered this in detail in my latest video, so this one will serve as a live example. And now, let's dive into the charts. Now, before we start, transparency. So as you can see here, I took the position from here and exited from here, right? And now, let's head into my Twitter account. And if you don't follow me here, then you are missing a lot, guys. I shared that idea on my Twitter on, I believe, Sunday, right? And this is the New Zealand dollar against the US dollar. So I said monthly, daily, 1 hour. And the draw liquidity is both equal highs on the daily and a monthly fair value gap. And if we head into the charts, so as you can see, we have this monthly fair value gap. It is still imbalanced, right? So I was looking for a move from here to here. And we have also this equal highs. We're going to see it clearly on the daily. So here's a daily clear chart and clean one, right? We have displacement, an expansion, retracement, right? And then another expansion, another retracement. So I was looking for that expansion to here. So here you can see that equal highs. So clear draw on liquidity. Plus we have that monthly fair value gap. So external liquidity, and we have also internal range liquidity on the buy side. And as you can see here, I used this inverted fair value gap. We have this huge imbalance, but I used this inverted fair value gap for refinement purposes only. So I can know how deep this retracement will go, right? So as you can see here, this fair value gap here offered resistance and then price went through it. And one more time, it offered support. As you can see, it is in the right context, just like we discussed in our previous video. It is in the right context, so it worked. And on the 1 hour, we have this market maker buy model. So original consolidation, distribution of shorts, and here we have sweep on liquidity just before the displacement, returning to this 1 hour fair value gap, and now this is the low risk buy, but we cannot take an entry on the 1 hour. I mean, if you want, you can, but I prefer to take it on the 5-minute and below. So this is the outlook that I shared beforehand on my Twitter account, and this is the result. So here's the trade that I took, the long position, and here's the result. So as you can see here, price went directly to that draw on liquidity and that monthly fair value gap. Right, and now and before we start, here's that playlist. If you study this, guys, if you study this and backtest it and demonstrate the strategy, I guarantee you that you will be profitable in the future. All you have to do is study this, right? Work on your psychology, your risk management, and this is basically all you need. And this is the trading plan that we're going to use, of course, right? And let's head into the chart. So here's the monthly chart, right? Again, the New Zealand dollar against the US dollar. So if you want to follow me, here is that fair value gap right here. So I was looking for a move to balance at least 50% of it. And as you can see, it happened. And now if we go to the daily chart and start using our strategy, right? So here you go. As you can see, the buys, we're going to use weekly, daily, or 4 hour. And we want to see an internal range liquidity to external range liquidity, or the opposite. In our case, we have internal range liquidity to external, so fair value gap to a high. So fair value gap, internal to external. And we have that checked, right? So the bias is clear, and that's it. And now we're gonna go to the confirmation or the narrative, and we're gonna use the 1 hour for this one. So daily 1 hour is the best suitable combination. And what we want to see is a market structure shift, right? And we want to see sweep first or an SMT divergence and a market maker X model for targets. And let's go to the chart again. So here's that 1 hour chart. We have market structure shift and a sweep first, right? Sweep on this high, on this low, and then a sweep returning to this fair value gap, right? And then here we can look for that 5 minute lower time frame entries, but I missed this, right? And we're gonna use the next expansion leg, and we have this one. So after this low risk buy, we have another expansion, and this is called the second stage of accumulation, this leg right here. So we have a market structure shift or a breakout structure, name it as you want, right? This doesn't matter. The most important part is you know where is the draw on liquidity. This is the most important part, guys. So we have an expansion leg returning to what? A discount fair value gap. And we have also a sweep on this equal lows right here before this expansion leg. So let's check our plan. As you can see, we have a market structure shift, sweep first on SMT, we have a sweep, and we have also this market maker buy model, as you can see here, right? And also the doll isn't topped yet, so we still can capitalize on this one. You don't have to trade only this one and then you abandon the pair. As long as the doll is not topped, you can always look for long opportunities. So the first step and the second step is checked, and now all you have to do is go to the execution. You need 15, 5 and 3 minute time frame for that. Time window is always London kill zone and New York kill zone. And as always, we're going to use market structure shift from a PD array on the confirmation time frame, so that 1 hour fair value gap, and we want to see sweep first or an SMT divergence and a market maker X model. The market maker X model, if it's clear on the 1 hour, we don't really need it on the execution time frame, but if it's there, then that's a great confluence, guys. So here we're gonna drop to the 5 minute and I'm gonna see what's going on, right? So on the 5 minute, what do we have? Market maker X model, horizontal consolidation, the first distribution of shorts, and then here we have a market structure shift. But as you can see here, we don't have SMT. We don't have a sweep on liquidity, so we want to see this low right here, sweep liquidity from this one before this market structure shift, right? But we don't have that. Instead, we have an SMT divergence. So as you can see here, right, this is the New Zealand dollar against the CHF Swiss, right? This is clear SMT divergence. And now if we talk about the daily profile, we can see that this is clearly a reversal day, right? So here that London. So London started from here, and this move right here was a Judas swing, right? This whole move right here was a Judas swing to trap sellers. But we know that this is only a retracement to a discount 1 hour fair value gap. And as you can see here, New York reversal. So New York completely reversed. So we don't really need the daily profiles in our strategy, but it's better to know on which profile you are operating. So the last part, we have a market structure shift, returning to a 5 minute fair value gap. This one right here, your entry should be here, your stop loss always here. Don't be greedy and put it here, right? And you can target 2R for me, I target 2R always, sometimes 3R, but 2R is the best for me. It's best for your psychology, and I have a high win rate because of it. And for you, you can target the original consolidation right here. And basically, this is it. Again, if you want more content like this, follow me on my Twitter account. I'm gonna leave it on the description down below. And if you have any questions, please DM me here or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.